All right, if you're thinking about where to put your money in 2026, you've probably hit that one big question. Do you go with traditional stocks or do you dive into the wild world of crypto? It's pretty much the decision every new investor is facing right now. So let's break it down and figure out what actually makes sense for you.
Let's just cut to the chase, right? The question on everybody's mind is, which one is going to make me more money? And, just as important when you're starting out, which one is the safer bet?
For anyone just getting started, the amount of noise out there can be, well, it's just overwhelming. You hear these crazy stories about stock market millionaires on one side and then crypto billionaires on the other. It feels like you have to make this massive, high-stakes choice right out of the gate.
I want you to think of this like a big title fight. In one corner, you've got stocks, the established, reliable champion of the investing world. And in the other corner, you've got crypto, the young, unpredictable, but incredibly powerful challenger.
So let's start with the champ, stocks. They've been the backbone of building wealth for generations. It's the traditional route for sure. But the question is, does traditional still mean it's the best?
It's a really simple but powerful idea when you think about it. When you buy a stock, you're not just buying some number on a screen. You're actually buying a tiny piece, a tiny slice of a real company. You become a part owner. So you're basically betting on the long-term success of that business.
And here's why that's so attractive to so many people. Because they're tied to real companies, stocks are generally way more stable. They're really designed for long-term steady growth. And while they definitely have their ups and downs, they're considered much less risky than crypto.
But, of course, there's always a catch, right? That stability often comes at the expense of speed. Building wealth with stocks? It's a marathon, not a sprint. It takes a lot of patience, and you have to be in it for the long haul.
Really, the best way to think about it is like the tortoise in that old story. Stock investing isn't about getting rich overnight with some explosive gain. Nope, it's all about that consistent, reliable progress over time. That's the name of the game. Okay, so now let's turn to the challenger in the other corner, crypto. It just bursts onto the scene promising to change, everything about finance. It's fast, it's digital, and wow, is there a lot of hype around it.
Now, here's the absolute key thing you have to get about crypto. It's not controlled by a central authority. These are decentralized digital currencies. And that independence from governments and banks, that's both its biggest selling point and, as you're about to see, one of its biggest risks.
And this is the siren song of crypto. The potential for insane, rapid growth is undeniable. We've all seen the headlines. Plus, the market literally never closes. It's 24/7. So you've got this incredibly exciting, high-stakes investment opportunity.
But, and this is a huge but, with that huge potential comes huge risk. The one word you need to know is volatility. Crypto prices can skyrocket, but they can also crash and burn in a matter of hours. What goes up like a rocket can come down just as fast, and you can lose all your money in the blink of an eye.
When it comes right down to it, putting your money in crypto is like the financial version of a high-wire act. The reward if you make it to the other side can be spectacular, but the fall can be absolutely devastating. It's the complete opposite of slow and steady.
Okay, so we've met the contenders. Now let's put them side by side, let's put them in the ring, and see how they really stack up on the things that matter most to a new investor like you. So when you look at safety, it's not even a contest. Stocks have the clear edge. They're a classic long-term play. Crypto, it can be a massive gamble in both the short and the long run. And as for risk, again, stocks are much lower risk, while crypto is practically defined by its insane volatility.
So if you boil it all down, the choice really seems to be between stability on one side and opportunity on the other. Do you want to build your future on a solid foundation, or do you want to shoot for the moon, knowing there's a much higher chance you could crash and burn?
But what if that's the wrong question? What if you don't actually have to choose one over the other? Let's talk about what the smart play is for somebody just starting out in 2026.
And here it is, this is the key takeaway. The smartest beginners don't go all in on one side of the ring. Instead of treating this like a fight, they figure out how to use the strengths of both. The answer isn't choosing, it's diversifying.
A common, pretty balanced strategy is a simple 70-30 split. So the majority of your money, 70%, goes into the stability and safety of stocks. That's your foundation. Then you take a smaller chunk, say 30%, and put it into crypto. That gives you a shot at that massive growth potential, but without risking your entire nest egg. It lets you have the best of both worlds.
But before you invest a single dollar in anything we've talked about, please remember this.
Do not invest based on hype. Don't invest because your friend gave you a tip. The single biggest mistake is jumping in without understanding what you're buying. Your most powerful tool, always, is education.
So, there you have it. We've laid out the differences, the risks, and a smart strategy to get started. The playbook is right here, in your hands. The only question left isn't really stocks or crypto anymore. The real question is one you have to answer for yourself. Are you ready to put in the time to learn and become a truly smart investor?